first year I filed my own tax return, I thought I was going to prison. And if we're being honest, I wasn't super confident that I did it right. And I'm sorry to be the bearer of bad news, but odds are good you've been filing your taxes wrong and are losing hundreds or even thousands of dollars in the process. Yes, you heard me right, hundreds or thousands of dollars. Now look, I know taxes can be super confusing with all the different codes and forms and reminders, but this tax season we're gonna be super prepared. So ahead of tax day, April 15th this year, we are going to learn how to avoid the biggest tax pitfalls that most people fall into. Why is this even important? Because a lot of us haven't been taught about how to file our taxes or even what really happens when we file our taxes. You walk into your first job and see all these numbers taken out on your paycheck, and then when it comes time to file your taxes, you put some numbers into some online program and just hope it's right. There's so much confusion around taxes, but we're gonna go over some common mistakes people make and make sure when you file right. We are going to take a step back and make sure that you have all the tools necessary to feel confident when filing. Let's get into it. Here are the 5 biggest mistakes you've probably been making when filing your taxes. The number 1 mistake is paying to file your taxes in the first place if you make under $79,000 a year. If you make $79,000 or less a year, do not Google file taxes for free. The very first link is gonna say TurboTax, free edition, 0 Fed, 0 state, 0 to file. But in fact, TurboTax Free Edition is riddled with booby traps where you'll be forced to pay to file things like collecting unemployment, childcare, student loans, really basic stuff. You see, at one point, the government was talking about creating its own free filing tax software for lower income filers. But brands like TurboTax and H&R Block knew that would cost them a bunch of money. So in 2002, they schemed their way in and said, no, let us create free filing software, and the IRS agreed. So all of these major filing software brands have true free filing programs, but they do everything that they can to prevent you from finding it, in the hopes that you'll just give up and spend a little bit of money and pay to file. If you want to learn more, Hassan Minhaj's Patriot Act episode on taxes does an incredible job breaking this down. But the TLDR is, if your adjusted gross income is $79,000 or less, go to this URL, and there you'll find multiple free online filing options, and you can choose the IRS partner that you feel most comfortable and confident using. The second mistake is spending your entire tax refund when instead you should consider putting at least 50% into a high-yield savings account. I know it feels super fun and almost like free money when your return shows up, but I promise you it's not. That is your money that has been borrowed interest-free for the past year. You don't have to fully deprive yourself of fun things and can treat yourself with your tax return. However, you should put as close to 50% of your return into a high-yield savings account as you can. This will allow half of that money to grow and either be put towards an upcoming important purchase, investment, or just to put in your emergency fund. A high-yield savings account allows you to get way more return on your money for letting it just sit in the account. It's more money in your pocket for literally no additional work. And speaking of high-yield savings accounts, this video is sponsored by SoFi, the ultimate personal finance app with my favorite high-yield checking and savings account that I personally use. At this time of year, and if you're watching this video, you're probably focused on getting your finances back on track or getting your upcoming money goals for the year ready, and SoFi can help. With the SoFi high-yield savings account, you can earn up to 10 times more on your money just by getting a better bank account. Maybe you're saving for a house or you're trying to pay off your student loans. Well, wouldn't that be a whole lot easier if you were just earning more money? SoFi offers up to 4.60% APY on savings with direct deposit and 0.50% APY on checking, so they can help you make more meaningful strides toward your financial goals without having to put in any more work. Best part, right now, if you set up a SoFi high-yield savings account, you can get up to a $300 bonus if you set up direct deposit. If you want a high-yield checking and savings account of your own, head to sofi.com/yourrichbff. Now on to our third mistake. The third mistake people make all the time is filing their taxes too late without an extension. If you file your taxes too late without an extension request, you're subject to a failure to file penalty. The penalty is 5% of the unpaid taxes for each month or partial month that the return is late. And the maximum penalty is 25% of your unpaid taxes, which can be a hefty chunk of change. This penalty can become super pricey very quickly, so if at all possible, let's avoid this. If you don't think you'll be able to file by the April deadline, or if you'd prefer to file at a later time, you can request an extension by filing Form 4868, but make sure to file the form before April 15th. You can find the extension form here, and if you know you're gonna need an extension, file and submit this form as soon as you can. If you do get an extension, make sure to properly record the dates you'll have to file by to ensure that you don't get hit with this penalty. The fourth mistake that's costing you money is filing your taxes under the wrong filing status. Taxes and all the forms and acronyms that go along with it can be super confusing, and sometimes that leads taxpayers to choose the wrong filing status. Your filing status is where you mark single, married, a dependent, someone who is the head of a household, etc. It might seem straightforward, but more people than you would realize often misinterpret these filing statuses. To avoid this, a tool that I love is the Interactive Tax Assistant on irs.gov, which can help taxpayers choose the correct status, especially if more than one filing status applies. If you're also using additional tax software or working with a CPA, they can help prevent any mistakes with your filing status as well. The key here is to always double check your status, and if you aren't sure which one you are or you have multiple, speak to a licensed tax professional or check out the exact explanations on irs.gov. And the final major mistake people make when it comes to filing taxes is not maxing out tax-advantaged accounts like employer-sponsored retirement plans, IRAs, 529s, HSAs. As soon as you're financially able, you need to be maxing out these plans. Each plan provides a slightly different tax advantage, but the main idea is that you're paying fewer taxes by utilizing these accounts while also investing for your future. When it comes to IRAs, these are powerful tools for retirement savings. Whether it's a traditional IRA or a Roth IRA, both offer tax benefits. Contributions to a traditional IRA are often tax deductible, reducing your taxable income for this year. Meanwhile, Roth IRA contributions are made post-tax, but withdrawals in retirement are typically tax-free for you later on. By contributing to an IRA, you're not only saving for retirement, but also reducing your tax burden now or in the future. 529 plans are specifically designed to save for educational expenses. These plans offer tax-deferred growth, meaning your investments can grow without being taxed as long as the funds are used for qualified educational expenses. This tax advantage makes 529 plans really attractive for parents or guardians saving for their kids' future educational needs. Not to mention, over 30 states actually offer state tax breaks for utilizing their 529s. Up next, health savings accounts are a unique option that offer a triple tax advantage. Contributions to an HSA are tax deductible, the funds grow tax-free, and the withdrawals for qualified medical expenses are also tax-free. And HSAs not only help you save for medical expenses, but can also serve as a supplemental retirement account if you don't use all of the money that you contribute. 401k plans are also another form of retirement plan that is employer-sponsored and allows employees to contribute a portion of their pre-tax income. Many employers also offer matching contributions, which is essentially free money. By maxing out your 401k contributions, you're not only taking advantage of tax-deferred growth, but also benefiting from employer contributions, accelerating your retirement savings. These accounts offer you a way to prepare for retirement and for the unexpected while also saving on your tax bill. That's what I call a win-win. Making sure you're taking all of these necessary steps to ensure your taxes are filed on time and correctly is going to ensure that you get the max refund or pay as little as possible on your tax bill. The tax system is beyond confusing, but hopefully these takeaways will help you have some more confidence when filing. Remember, you can always ask questions, and if you're really stuck, reach out to a CPA if you have a more complicated tax situation. See you in the next video.